Good evening, ma'am. Good evening, classmates. We are the Shine Group. Our topic of the night is about classification of taxes. There are four types of classification of taxes: direct and indirect taxes, proportional, progressive, regressive taxes, specific and ad valorem taxes, value-added tax or VAT, direct and indirect taxes. Direct and indirect tax. Direct taxes are imposed by the state upon persons who are expected to bear the burden of these taxes and who are not expected to be able to shift the tax burden to other persons. In other words, in the case of direct taxes, impact and incidence are on the one and the same person. Indirect taxes are taxes which are imposed upon persons who are expected to shift the burden of the tax to other persons. In other words, in the case of indirect taxes, usually the impact and incidence will be on different persons.
Proportional, progressive, and regressive taxes. Proportional taxation. A schedule of proportional tax system is one at which the rate of taxation remains constant as the tax base changes. In other words, when the rate of taxation remains the same for all incomes or property, large or small, then we have proportional taxation. Progressive taxation. A schedule of progressive tax system is one in which the rate of taxation increases as the tax base increases. That is, if the rate of taxation increases as the income or property increases. Then we have progressive or graduated taxation. Moreover, a tax is progressive if it is graduated in such a way that rate of tax rises more sharply than increases in income or capital. The amount of tax payable is calculated by multiplying the tax base with the tax rate. Regressive taxation. A schedule of regressive tax rate is one in which the rate of taxation decreases as tax base increases. In other words, if the rate of taxation diminishes as the income or property increases, we'd have regressive taxation. Taxes that are unrelated to the taxpayer ability to pay are regressive. The amount of tax payable is calculated by multiplying tax base with tax rate.
Ad valorem and its specific duty. When a tax is levied on the basis of the value of a commodity or property, it is known as ad valorem duty. This duty is expressed as a percentage of the value of a commodity. In this case, irrespective of weight and size of the commodity, tax is charged purely according to its value. However, ad valorem duty has the following drawbacks. It is very difficult to know the real value of a commodity at the time of imposition of tax. Moreover, there is wide scope for tax evasion when traders understate the value of a commodity. Specific duties. When a tax is imposed on a commodity as per its weight, it is called specific duty. Specific duties are expressed as definite sums to pay the definite weight of a commodity. For example, when the exercise duty is imposed as Rs 10 per quintal or excise duty on cloth as 10 paise per meter, it is a case of a specific duty. In both the cases, weight and length is used as the basis of taxation. The most important advantage of specific duty is that it is easy to levy and very convenient to collect. However, specific duty results in higher revenue only when there is an increase in the physical volume of output.
Value added tax, VAT. Value-added tax or VAT belongs to the family of sales tax. It is of recent origin. This tax has been adopted as an important tool to impart greater flexibility to the revenue base of an economy. VAT possesses certain advantages. It eliminates some of the problems associated with double taxation. Moreover, it helps to reduce the tax evasion done under the sales tax system. Another argument in favor of VAT is that it will not adversely affect the allocation of resources between different industries. It is simple to administer and satisfies the canon of economy. Net value means gross value minus value of material purchased from other firms. The salient feature of VAT is that it falls on the value added of each stage from the stage of production to retail stage. Next, however, in practice, VAT is charged on each taxpayer after deducting from the tax payable of his output the tax he has paid on his input. Thus, it gives a comprehensive system of commodity taxation to a country.
There are seven types of tax distinguished from other fees. First is toll, penalty, a special assessment, permit or license fee, debt, revenue, custom duties. Number 1. From toll. Toll is a sum of money for the use of something generally applied to the consideration which is paid for the use of a road, bridge, or the like of the public nature. Number 2. From penalty. Penalty is any sanctions imposed as a punishment for violations of law or acts deemed injurious. Violations of tax laws may give rise to impositions of penalty. From special assessment. A special assessment is an enforced proportional contribution from owners of lands for special benefits resulting from public improvements. So,
Number 4. From permit or license fee. Permit or license fee is a charge imposed under the police power of purposes or regulation. The meaning is the license fee is imposed for regulations and involves the exercise of police power, while the tax is levied for revenue and involves the exercise of the taxing power. Failure to pay a license fee makes an act or a business illegal, while the failure to pay a tax does not necessarily make an act or business illegal. Number 5. From debt. Debt is generally based on a contract, is assignable and may be paid in a kind while a tax is based on law. Cannot generally be assigned and is generally payable in money. A person cannot be imprisoned for non-payment of debt, while he can be for non-payment of tax except poll tax. A tax is considered a debt for purposes of remedies of its enforcement.
Revenue. Revenue is a broader the tax since it refers to all funds or income derived by the government, taxes included. Other sources of revenues are government services income from public enterprises and foreign loans. So revenue is the value of all sales of goods and services. Custom duties. Custom duties are taxes imposed on goods exported from or imported to a country. Custom duties are actually taxes, but the latter is broader in scope. Example of custom duties: anti-dumping taxes, trade tariffs, export duties, and excise duties.
Powers of BIR. Under the Bureau of Internal Revenue Code of 1997 as amended by the Republic Act number 10963, together with the 13th different title. The Bureau of Internal Revenue shall be under the supervision and control of the Department of Finance, and its powers and duties shall comprehend the assessment and collection of all national internal revenue taxes, fees, and charges, and enforcement of all forfeitures, penalties, and fines connected therewith. Bureau of Internal Revenue is headed by the Commissioner of Internal Revenue and 4 Deputy Commissioner. The power of Commissioner is to interpret tax laws and to decide tax cases. The power to interpret the provisions of this code and other tax laws shall be under the exclusive and original jurisdiction of the Commissioner, subject to review by the Secretary of Finance, and there are 5 officers tasked to administer and enforce the tax code. Number 1, Revenue Regional Director. Number 2, Revenue District Officer. Number 3, Revenue Examiners. Number 4, Division Chief. And the number 5 is the Bureau of Internal Revenue Collection Agents.
Powers and duties of the Bureau of Internal Revenue. Number 1, assessment and collection of all national revenue taxes, fees, and charges. Number 2, enforcement of all forfeitures, penalties, and fines on internal revenue taxes, fees, and charges. Number 3, execution of judgments in all cases decided in each favor by the Court of Tax Appeals and the ordinary courts. Number 4, give effect and administer the supervisory and police powers conferred to it by the tax code and other laws. It is a mandate that they need to follow, and their mission is to collect taxes through just enforcement of tax laws for nation building and the upliftment of the lives of Filipino. Powers of the Commissioner of Internal Revenue. Number 1, to interpret tax laws and decide tax cases. Number 2, to obtain information and to summon, examine, and take testimony of persons. Number 3, to make assessments and prescribe additional requirements for tax administration and enforcement. Number 4, to conduct inventory, taking surveillance, and to prescribe presumptive gross sales and receipts. Number 5, to terminate taxable period. Number 6, to prescribe real property values. Number 7, to inquire into bank deposit accounts. Number 8, to accredit and register tax agents. Number 9, to prescribe additional procedural or documentary requirements. And 10, to delegate power to subordinates.
Summary alpha list of withholding tax. Agents, payers of income, payments subjected to creditable withholding tax at source. SOT is a consolidated alphabetical listing of withholding agents from whom income was earned or received and subjected to withholding tax. SOT means Summary Alpha List of Withholding Tax. For example, is when the payee files a quarterly and annual income tax returns, it attaches the Summary Alpha List of Withholding Taxes. Thank you and good evening, everyone.